Hello and welcome to this Wednesday's morning market briefing. We've got lots to talk about, but firstly, Tesla misses profit estimate as Elon Musk delays robotaxi launch. As well as that, Alphabet revenue jump shows no sign of AI denting search business. We've got lots to talk about on the charts, also with lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it though, make sure to subscribe. The first article to talk about is to do with Tesla and robotaxi. Now, the second quarter profits release for Tesla has now come out and shows that Tesla's profits have slumped a massive 45% during the second quarter of 2024. This comes as Tesla continues to face lower sales whilst having to deal with the soaring costs arising from employee layoffs. Now, of course, this has, not this topic specifically, but ultimately, we talk about Tesla a lot on this channel for obvious reasons, that being that Tesla is a massive tech company which has massive impacts on the markets as a whole, and it allows us to better track certain industries. Obviously, Tesla represents a massive part of the EV industry, which has been a hot topic recently, as of course EV companies, especially these key EV manufacturers, have really been struggling with sales as a result of competition and some growing worries actually to do with the EV technology and the fact that governments are actually starting to shift back away from the kind of very positive push that they did have on the EV industry, where they were pushing for consumers to adopt, or the public to adopt EVs. They're now not so much pushing for that, and more so kind of looking at a more balanced approach. And as a result, ultimately the key thing is the EV hype is somewhat degrading, and we're not seeing those sales just as much as we were seeing before. So that's why Tesla is firstly very important to note, but also of course Tesla represents a really kind of interesting and innovative part of the tech industry, whether that be AI, as we spoke about recently with Elon Musk obviously having to fly out to China to speak with the second most important Chinese premier. Speaking to them, he was able to kind of convince them and come up with some sort of deal to allow Tesla to use their AI technology within their vehicles out there in China to help beat competition. So obviously, Tesla, whilst they do have that EV side, and that is obviously what they represent most importantly, let's not get that wrong, at the same time, they do represent this other side of tech, which is definitely very AI focused, which is definitely very, how can we be sustainable and build out these new models, not necessarily new models, but how can we create stuff essentially, whereas you might see with other kind of tech firms, they're staying within their lane. Tesla often kind of finds a way to move into different industries and build different smaller sectors of their own company and see what they can do with that. But once again, returning to the fact of it is an EV company most importantly, and that's why this topic of robotaxis is of course very interesting to note. As I did say at the start of this morning market briefing that EVs, or at least EV companies, are really struggling with sales. As I said, growing competition in China, that's been massively affecting it, but also of course worries to do with the EV batteries, and also a lack of now government support for the EV industry is just causing the sales to not be there as they were maybe for 2 years ago, 4 years ago, and so that's the kind of key issue that's facing many of these companies, and Tesla is one of those companies which have been really struggling with this issue. That's why of course Elon Musk, as I said earlier, flew out to China to try and make sure that all of their technology was available to be used in China, so that they would still find buyers within the second largest EV market. So all of these kind of things are very important to of course note when we are talking about EVs or just the automobile industry as a whole. And obviously as a result of the kind of lack of sales that we're now seeing with the EV industry, it does seem like shares will be falling, or at least that's kind of what is so far taken place for Tesla, as of course they failed to meet those profit estimates, which seemingly didn't factor in this little sales for EVs. And also the kind of key thing to note is it didn't really factor in the amount of cost that is currently facing Tesla with as I said, not only the employee layoffs, but also the fact that Tesla has invested heavily, as I said earlier, to do with the AI industry. That investment into AI infrastructure obviously is not cheap at all, and as a result, is cutting into, or is burdening Tesla with extra costs, which possibly other EV manufacturers won't have to face. So maybe that's something that's important to know. But here we have, of course, Tesla, which are always trying to make leap and bounds to stay at the forefront of the industry, and therefore they are now taking on the front of the costs for AI infrastructure and that kind of thing. So definitely keep your eyes on this topic. It is very interesting indeed, and of course we'll definitely track Tesla and other US indices over the coming days and weeks to really understand what may be the outfall of this. Now, the recent hype surrounding AI have also led to Tesla making instrumental investments into AI infrastructure, which is adding to the growing costs. Yeah, that's what I just said. During the quarterly earnings announcement, Elon Musk also came out and officially postponed the planned unveiling of Tesla's first robotaxis. These robotaxis, which sound like something out of a futuristic film, is a concept in which Tesla offers a fleet of self-driving taxis. Musk did say, however, that despite this now 2-month delay from August to October, the project to turn all Tesla vehicles into an autonomous fleet would end in Tesla 6 timesing their Tesla's market value. Now, Tesla's net income for the second quarter was expected to come in around $1.9 billion, according to analysts. However, instead, it came in at $1.47 billion. Revenues also rose 2% to reach $25.5 billion, which narrowly exceeded expectations to the upside. This change could largely be explained by the record growth in Tesla's energy storage business, as well as their unusually large sum of regulatory credits for emissions. So very interesting situation facing Tesla, and this quarterly earnings report obviously will be weighing on Tesla stock over the rest of this week, and even possibly leading into next week and next month. So definitely keep your eyes on this topic. Pardon me for yawning once again, but definitely keep your eyes on this topic. Very important indeed. That's all to talk about on this article, though. Next article to talk about stays on the topic of the tech world. This time talking about Google, though, and Alphabet, the parent company of Google, of course, and the topic of AI once again. Now, Alphabet's revenues have now jumped 14% higher over the course of Q2. This comes as double-digit growth in advertising proves that AI chatbots, including the likes of ChatGPT, have still not yet made a dent in the relevance of Google. Now, this, of course, was a key topic facing Google, as we saw the likes of ChatGPT and other, AI models growing in their relevance. So ultimately, if we can think back to when Microsoft and OpenAI were coming out with this ChatGPT chatbot, many started to question the relevance of things like Google. Many people started to kind of look at Google as possibly this instrument that was used by a single generation or two, especially to kind of build the industries that we now see today. But ultimately, what we were now seeing is this kind of transfer in the way that tech is used within societies, and now we are going to see Google kind of phased out and AI being brought in, as ultimately ChatGPT and others would then start to facilitate those same uses that maybe that Google as a search engine would offer, and therefore the relevance of it is kind of not so much anymore. And that was the kind of key thing that was facing Google. That was the key question, the key challenge that was facing Google, and many came out and said the exact same thing. Many fund managers obviously felt the same about that, but we also saw the likes of Bill Ackman, of course, who did in fact come out representing a massive hedge fund, of course, and did back Alphabet, did back Google during this time, and said that, well, really, we have to look at what Google offers, as well as being a search engine, with its data services and advertising services, and ultimately what Google will actually be able to do within the AI space is really unparalleled to other tech giants, as not many tech giants actually have the same type of relevant data that of course Google will be able to offer to key language models. And that's kind of been the key thing, which certain fund managers like Bill Ackman have said, and that's why they've kind of maintained their thesis that of course Google is still a very clear and good investment for them personally, and therefore that's why we've kind of seen this split, seen this divide in minds within the investment world. And it will be very interesting to see how Google remains and stays relevant within this space, as although they kind of want to integrate AI, we're already seeing that of course with, I believe, Gemini. I believe that's the name for Google's AI model. Pardon me if I'm wrong, but ultimately, whilst we are seeing that Google's trying to incorporate all these kind of things, it's undeniable that ChatGPT and other AI models will be providing serious competition to the likes of Google, which possibly may end up being seen as just this older form of technology and therefore being out of fashion, and how that may affect a consumer mindset and that kind of thing, and therefore affect the key business model of Google, which is centered around their ad service, which lines up with their data services as well. So definitely keep your eyes on this topic. It's one that will keep coming back to, of course, because it's super relevant. And of course, we're talking about two topics of revenues and earnings and all of that, because it is earnings season ending off Q2 and going into Q3 now quite significantly. So definitely keep your eyes on this topic, as I said, with this obviously coming at a time where there's growing demand for computing and data services, with the big tech corporations fighting to build large AI models. This was shown especially in Alphabet's revenues, which saw strong growth in its cloud computing business. Revenues officially rose from $74.6 billion to $84.77 billion during Q2. This beat analyst estimates of $84.2 billion just marginally, and net income was also shown to be up 28%, sitting at the figure of $23.6 billion. Alphabet stock, as a result of the recent tech craze, has risen by almost a third this year, which now gives it a market cap of $2.26 trillion. This makes it the world's the fourth most valuable listed company. So very interesting there. Definitely one to keep your eyes on, as I've said many times now, and something we'll be coming back to many times, of course. That's all to talk about on the articles, though. Next to talk about is the charts, where, like always, we're starting on the US 30. Now, of course, in yesterday's morning market briefing, I was not there. I did not post one, so I do apologize for that, but hopefully we haven't missed out on much, and we can catch back up with the markets as we do start off with the Dow Jones like usual. Now, as you can see, not much really happened on the Dow Jones over the course of yesterday, it does seem like. As we can see, starting off on Monday, we were sitting around the 40,306 mark, and since then we've kind of returned back to that level, just slightly below really, sitting around now the 40,230 level, 40,270 level, pardon me. So really no change at all, as price does somewhat consolidate after the significant moves that we have seen take place for the Dow Jones over the past few weeks, as of course we saw this serious rise take place over the week of the kind of, what was it, the 8th of July through to the 12th of July. We saw that kind of swing to the upside, which continued over the course of last week. But obviously midweek we ran into the issues to do with the IT outage, with certain issues to do with Microsoft systems especially, and as a result many industries around the world, but especially key industries including airlines, healthcare, and others within the manufacturing sector even, saw outages, which has definitely now weighed on the Dow Jones's performance, as we have seen this sell-off now take place from around the 41,400 mark. So a very significant sell-off, of course, but ultimately price does remain sitting on this 50% Fibonacci retracement level. It will be interesting to see whether price will use this level to bounce to the upside somewhat, Or in fact, are we now expecting sell-off to the downside, a continued sell-off to the downside, where then price can maybe utilize the area around the 78.60 before a move then takes place to the upside. So we will have to wait and see. Definitely keep your eyes on the US 30. Lots to think about there. Next to talk about though is the dollar, where not much is really happening. At the start of the week, I did know that we were starting to somewhat see inverse head and shoulders pattern. Arguably, we've seen that. Arguably, we haven't. As ultimately, we could argue that, of course, this is the baseline over here, and then this is the shoulder line, with then the head being down here. But ultimately, this kind of area of price just, the way it's kind of forming that pattern isn't as clear as, of course, what we saw back here around the start of last week and end of the week before that. And so, it is hard to say whether we are really seeing an inverse head and shoulders pattern. Ultimately, what will be interesting to see is whether price will continue this swing to the upside, whether it will break above this kind of 38.20 level, old 38.20 level, which is really a key kind of liquidity zone and key resistance level. So should price break above that, we've kind of got open ground to the upside, and we can definitely see price moving all the way to the upside and reach around the 105.14 level. So definitely keep your eyes on the dollar. Obviously very relevant always, and we are receiving some US data today which will be affecting the dollar, of course. Next to talk about is Euro USD, which has a lot of data coming out today, which will of course be affecting it. Not only key US business, manufacturing and services data, but obviously masses of Eurozone business, services and manufacturing data as well. So all of that will be affecting Euro USD, of course, which at the moment is sitting in this lower level of liquidity after the price sold off from this higher area in the range that is now seemingly formed ending mid last week. So price sold off from that higher area of liquidity around the 1.094 level and is now sitting around the lower levels of 1.08459 level. So it will be interesting to see whether price will break below this liquidity zone or bounce back again to the upside. Definitely keep your eyes keep your eyes on it indeed. As I did say, we are receiving quite a bit of Eurozone economic data which will be affecting Euro USD. Next talk about though is pound yen, which has just continued this swing to the downside to start off the week. As obviously, when we were starting this week off with the weekly market briefing, I was noting that price was still, whilst it had sold off quite significantly over the last week or so, price was still in a level where we could see, a recovery to the upside. But instead, we really just have seen this continued push to the downside, this continued sell-off, with price even nearing now that 200 yens for a pound mark. And of course, price reaching that level, it would be very significant because it does mark a very key psychological level, which price struggled to break above for quite some time over the course of last month and even earlier back in May and that kind of thing. So definitely keep your eyes on pound yen. A sell-off to the downside, of course, will have a significant effect on the markets. But at the same time, because we are already kind of sitting on some lower levels of liquidity back and around these old areas of resistance in May, we could also see price rise back to the upside. So definitely keep your eyes on that. Next talk about though is Bitcoin, which is sitting at the $65,000 Bitcoin mark at the moment. Price did sell off to start off the week, so we did see that kind of upswing over the weekend. But to start off the week, we saw price sell off from this key liquidity zone, key resistance level that we'd previously noted out. So price has now sold off from that level. That said, we haven't really seen a massive sell-off, more so kind of a retracement more than anything. So we could definitely see price react to one of these key areas on the Fibonacci retracement tool before a continued move to the upside takes place. Definitely keep your eyes on any news from Powell though, which of course always is affecting Bitcoin at the moment, and obviously news from any regulatory authority regarding crypto as well. Next to talk about though is gold. Pardon me, I forgot what I was going to say there. But ultimately, gold started off the week by doing not too much, and ultimately has kind of just bounced slightly, arguably, has just kind of slowly, gradually moved away from this area of liquidity, this area of support. which price initially used to swing massively to the upside over the course of last week or before, and is now kind of just being used once again as a springboard possibly, but ultimately at the moment it's just being used as a light area of support. So definitely keep your eyes on gold. Any news from the US will definitely affect it, but not too much to note really for gold today. Definitely keep your eyes on world conflicts though. That is always a very important thing to note when we're looking at gold. Next to talk about though is oil, which is definitely relevant with regards to conflicts, because arguably the decline in tensions within the Middle East has led to this sell-off now for oil, as tensions were kind of at an all-time high, especially regarding a potential Israeli-Hezbollah war, which was definitely a key topic ending of June, starting July. But since then, tensions have kind of dampened slightly, with less talk really about a potential conflict, and as a result we have seen a sell-off now take place for oil, as price has moved to the downside, has now even breached levels around the $81 a barrel level. So very key psychological levels now breached. Definitely keep your eyes on oil. Lastly, to talk about, like always, is the economic calendar. We're receiving lots of economic data today, so I'm going to get through it quick. Pardon me if I skip over anything that's more relevant to your trading style or something like that, pardon me. Ultimately, we are receiving Aussie manufacturing and services figures, as well as the German consumer confidence figure, followed by the French business and manufacturing and services figure, as well as the German business manufacturing and services figure, followed by the Eurozone's business manufacturing and services figure, as well as the British business manufacturing and services figure, and then the Spanish consumer confidence rate, followed by that receiving the Bank of Canada's interest rate decision, as well as the US business manufacturing and services figure as well. And then to end off the day, we are receiving the Bank of Canada's press conference, which obviously is following that interest rate decision. Definitely listen out for that Bank of Canada interest rate decision, because we are forecasting a cut, it does look like. But that's all to go out on the economic calendar. We've got lots in the articles, lots in the charts, and lots in the economic calendar. Hope you have a great trading day. But that's all from us at Wildwood Capital. Have a great one. See you later. Bye.